e-ink technology. It's actually a plastic screen. So where a Kindle screen is silicon on glass, this is an organic substrate on plastic, and then you get this 180-degree bend. So the screen actually goes all the way around the spine of the device. Cool. And then they're magnetic, like magnetiles. I don't know if you're
we have many magnetiles at home.
They're so much fun, right? And so the stacks are that sort of satisfying in that same way, like playing with a stack of poker chips is satisfying.
Yeah.
But they magnet together like magnetiles, and then you get that stack of cash look with the curved screen on the spine all the way down. So it really is a luxury device for security.
So give us an idea. So Tim and I would put or Tim might put on his, or what I would put. What would we put on there?
So what you would do, generally speaking, I'll give you how an average ledger user or a sophisticated ledger user might use their devices. So they probably have a couple of them. One is for maybe longer term storage, and one of them is one they use every day, and they're maybe a little more promiscuous with. In other words, if you're doing a lot of activities online every day, you want to have, your kind of like big bulk of value in one that you touch less often and you never connect to the web, and you have what I would call a mint wallet, which you're using to interact with the internet of value more often. Maybe it's one that you have even when you're walking around and you want to use it to spend a little bit of money or something. And then the other thing that you're doing, and this might be on that same one, or it could be on a third, is one that you're using for your passwords and your logins, right? So for me, whether it's my my login.gov account, my Google account, my X account, my two-factor authentication is not my mobile number, which we all know is not secure because it's susceptible to things like SIM swaps.
Right.
But it is my ledger, which is using a secure element chip inside of this offline device.
Don't you need to get buy-in from all those third-party services that use two-factor authentication right now in order to authenticate using a ledger?
It's a great question, and the answer is no, because it's a standard, right? So that is all standard 2FA. There are other, whether it's often now that's connected with your Face ID on Apple, or with your thumbprint maybe on your Samsung phone, or your 1Password software might be using that same protocol for 2FA and passkeys. Ledger uses the exact same standard to do that, which is 2FA and passkeys, which is based on the standard called FIDO2.
Does this replace Password Manager?
It, not necessarily, but it does some of the same functionality. So your password manager helps you manage piles of passwords. So look at the way the average user is using passwords right now. There's only two approaches: either very bad password hygiene,
which means you're using the same password for everything,
which is probably the majority of people, right?
Yeah.
Or there are more sophisticated users that have sort of centralized that risk in the password manager.
But it's still a mess.
It's still difficult. Like, look, the amount of times that even if you have good practice, meaning you're using a product like 1Password, the amount of times that you're going into that thing to get those passwords is kind of astounding. And it shows you, it's funny, I can't remember who said it, but like we just kind of we accept like the way things are broken. Passwords is something that everyone agrees with. We're all operating in a very broken universe. There are only two options: either really sort of the nightmare of good password management, or bad password hygiene. Joanna Stern from the Wall Street Journal did some great reporting end of last year about about iPhones getting stolen, and iCloud accounts getting stolen.
I think Apple actually made some changes
exactly.
that were prompted by that series of stories.
Exactly. And passkeys is a move away from that, right?
Yeah.
So going to having it's much more secure to do that with Ledger.
Just got about 40 or 45 seconds left here. So, what does it take to get like a complete buy-in from like a broader mass society to make this ultimately? I'm assuming you want to build it and have it grow.
So I think usability is a big one, and I think with Ledger Stacks and Ledger Flex and Ledger Recover, we're heading toward a product where more users can do self-custody, right? And that means self-custody of digital assets. So I think what this takes is broader adoption of digital assets, which comes in phases, and it's coming again. We have another phase coming, I think, right now, and then having more and more uses of these digital assets in our lives, right? So not just speculation, but uses of digital assets in our lives.
Ian Rogers visiting us from Paris, here in New York City, Chief Experience Officer at Ledger, here in our Bloomberg Interactive Brokers studio. Coming up next on Business Week, we're going to drive you to the close.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
It's 3:40 on Wall Street. I'm Amy Morris. Stocks are mixed. Not a lot of movement as traders are still waiting for the big market-moving event of the week tomorrow afternoon. That's when NVIDIA reports earnings. The AI chip giant is the second most valuable company on the S&P 500, and that valuation could mean some big swings for the market. NVIDIA shares 1.6% higher. We check markets for you all day long at Bloomberg. As promised, not a lot of movement. S&P 500 is up 8 points. NASDAQ up 36 points. The Dow is down 7 points. The 10-year Treasury yield at 3.83% now, and the 2-year yield at 3.9%. Fed Chair Jay Powell said at the Jackson Hole Symposium on Friday that the time had come for the U.S. to cut its policy rate. Zillow CEO Jeremy Waxman says there needs to be more than 1 or 2 rate cuts in order for the housing market to unstick.
It's going to take more than 1 or 2 rate cuts to really unstick the market. It's really about getting those sellers who are sitting on lower mortgages unstuck and wanting to trade up. That's what helps bring supply online. And as they talked about before, it's really about builders building more inventory because we still have an inventory deficit.
Zillow CEO Jeremy Waxman speaking exclusively with Bloomberg's Open Interest. CoreLogic says U.S. home prices rose 5.4% in June from a year before. That's faster than the overall inflation rate. And that is a Bloomberg Business Flash.
How about you let me drive?
Oh, no.
Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Globe
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just got about 19 minutes left in today's trading session, and we are seeing the S&P 500 just up a hair. You just heard Amy breaking down some of the trade, which I think puts the S&P. Shouldn't I know this? Because we did see what the S&P closed.
You were on vacation. You don't need to know this.
But I do follow. But we continue to hover around.
This is her real-time charting with Carol Masser. It's a new program
If
on Bloomberg.
only I could be like Abigail Doolittle. Yeah, so just watching the trade here, and we'll see where we end up. But I mean, I do feel like we're just at this, again, a waiting point because we want to get through NVIDIA earnings.
we do want to get through it and kind of like figure out what the next catalyst is going to be, right?
Well, I think it's going to be a few economic data points, right? Inflation, jobs report, and then you get the Fed decision come September.
Okay, well, let's think about what Emily Rowland has to say, Co-Chief Investment Strategist for John Hancock Investment Management, joining us from Boston. What is interesting to you right now, Emily?
Well, of course, tomorrow we're going to get the earnings report that's heard around the world. And I think that's what markets are more focused on right now. We've seen tech take a little bit of a breather here. And I think the key thing that investors are watching is, if NVIDIA does disappoint, could there be a broader rotation into other parts of the market? When an entire stock is the size of an asset class, and remember, this stock is bigger than the bottom 3 sectors in the S&P 500, there's a lot of money that's potentially in motion there that could benefit other parts of the market. So I think that's really the key. Of course, we've got more economic data on the docket as well, but I think it's really that earnings report tomorrow that investors are worried about. And then we can just move on and go straight into that long Labor Day weekend.
Yeah, it is kind of interesting, right? We kind of just go from these like points to points or metrics to metrics, catalyst to catalyst. So what do you do for investors? What do you tell them when they call you up and they say, hey, Emily, what should we be doing right now in today's environment? We talked earlier as a preface or backdrop with our Gina Martin Adams about like looking at bonds and stocks in terms of returns and valuations. And, there are opportunities on both sides.
There are, and one of the nice things right now is that bonds are working as diversifiers. We're actually seeing the correlations between stocks and bonds move lower, and that's been one of the biggest challenges for investors over the last couple of years. Is we've had sort of enemy number one, which is inflation, wreaking havoc on fixed income investors, not being great for equity markets during times where rates have backed up. Now we're in this environment where bonds are working again and stocks are behaving nicely here as well. So that's a really big benefit for investors. We do think that the bond market sort of has it right here. We see an environment where inflation is decelerating, growth is slowing. So we want to be kind of mindful of positioning for this late cycle environment by owning high quality stocks. These are companies that have great balance sheets. They have tons of cash, great return on equity. Right now, margins are getting compressed. You're seeing this amazing earnings and revenue growth that we saw over the last few years as companies pass higher prices along to consumers. That's starting to slow at the same time as the cost of capital still remains elevated. So that's putting a ton of pressure on margins. We want to own the types of companies that can defend margins better. If you look at quality as a factor, it is going to bring you into mega cap tech companies. That's great, but we also have a bit of a valuation issue there. There is some frothiness in the space. So we want to diversify away from that by also owning quality at a reasonable price. I think we came up with that term. I'm still trying to figure it out, but you get the idea. We want to look to the value side for areas that are trading on sale. Sectors like healthcare are trading at a 10% discount to the broad market. It's got great earnings revisions. And then finally, we want to start legging into some more defensive areas of the market here. We are seeing signs that the consumer is shifting their behavior. We think that consumers might not necessarily buy the next thing they want to buy. Should tell my kids that's happening because credit card interest rates are 20% right now. We're dealing with some challenges. We saw in the consumer confidence report today that people are less positive about the jobs market. Jobs plentiful is going down in terms of those views. So we want to look to things that the consumer is still going to need to do. You're still going to turn the lights on, take a shower, you're going to go to the doctor. So I think looking at more defensive areas like utilities makes sense. And then finally, to your point, letting bonds do some more heavy lifting in portfolios, given the yields are so elevated there.
So where don't you want to be?
I know, we love it all, right? So one of the things that we've seen is actually this shift into more cyclical areas. That's something that we're actually looking to fade here. So what you've seen is that because of this concept that the Fed's going to be cutting so aggressively, especially versus other central banks, the dollar's weakened. And in a weaker dollar environment, that helps support things like international equities. It's almost like a global liquidity release valve that helps riskier areas outperform. We've seen this bid until really today for small cap equities. That being, again, a function of investors' perception that with the Fed kind of cementing those rate cuts at Jackson Hole last week, that's going to bring the cost of capital down, which would benefit the most indebted companies, which you're going to find in small cap equities. We actually don't see that. We see slowing inflation coming hand in hand with slowing growth, which isn't the greatest thing for more cyclical companies or ones that are more exposed to the economic cycle. So we would be fading this move into areas like international stocks. Not that we don't own them, it's just not our favorite part of the market because of our preference for quality. We'd be fading this move into growth at any price type companies, and again, loading up on higher quality and potentially more defensive parts of the market in an environment where growth essentially does slow. We do see an economic contraction. You want to be positioned for that.
Is there anything out there that's concerning you about a potential economic contraction just in the last 45 seconds we have with you?
It's tough to see it right now. And, certainly markets are still sunning themselves on soft landing island. But things don't usually end that way. Typically, you see the Fed going too far, too fast. You start to see those cracks in the consumer. And sometimes you don't know it until it's too late. We look at things like initial jobless claims as being one of those most timely indicators. No issues there. But if we saw that break out above, say, 300,000, that would be a concern. It would probably go hand in hand with high yield bond spreads widening out. Those are the types of things we're watching. Again, not seeing it right now, but the music can stop pretty fast here, and we want to be mindful of that as we head into a trickier stretch for the markets.
Emily Rowland, Co-Chief Investment Officer, Co-Chief Investment Strategist, for John Hancock Investment Management, joining us from Boston. And speaking of Boston, attention New England listeners, Bloomberg 106.1 and 1330 are moving to 92.9 FM. Starting September 3rd, listen to Bloomberg Radio in and around Boston on 92.9 FM. It is your news source for business news from the financial center of New England. Bloomberg Radio, moving to 92.9 FM the day after Labor Day.
We're moving?
We are stuck here.
Stuck?
Yeah.
Do you really mean that?
We get to be here. Boston in the fall, let's go.
I love Boston. All right, everybody, you are listening and watching Bloomberg Business Week. Carol Master, Tim Stanovic, this is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg in Washington, I'm Amy Morris. Investors counting down to NVIDIA earnings after tomorrow's close of trading. The bar is high for the AI chip giant to show the spending boom still has momentum. And NVIDIA is the second most valuable company on the S&P 500, so that valuation could also mean some big swings for the market. Ryanair expects lower fares and slash sales will be needed this winter to attract would-be flyers struggling with higher interest rates. CEO Michael O'Leary tells Bloomberg TV that air traffic control, he calls it ATC, is part of the problem.
From an operational point of view, ATC has been a nightmare. ATC fees have gone up 15% in the last 3 years. European flights are at 5% less than they were in 2019, but the number of ATC delays and cancellations are 3 times in summer 24 what they were in summer 23. So we're paying more for a poorer service.
O'Leary also reiterated his frustration with Boeing, which has struggled to ramp up production as it works to bolster quality controls after that accident back in January. The long-running saga over Paramount Global and its new ownership may be nearing an end. David Ellison's Skydance Media is poised to take over the struggling media company after Seagram's heir Edgar Bronfman Jr. dropped his last-minute $6 billion bid. Bloomberg Intelligence media analyst Geetha Raghunathan says Bronfman's offer was kind of a head-scratcher.
One could argue that maybe he didn't want to, kind of show his hand too early. But at the end of the day, he obviously does not have the financial firepower of the Ellison family. And that's something I think investors are going to have to come to terms with.
Geetha Raghunathan with Bloomberg Intelligence. Paramount shares down nearly 7%. And Walmart bringing pre-owned watches and collectible trading cards to its online marketplace. The retailer looking to further beef up its e-commerce business. Those are the company stories we're following this hour. I'm Amy Morris, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, less than 5 minutes to go until we wrap up this Tuesday trading day. You just heard Amy breaking down the numbers. We're pretty much near our highs, just off our highs, but little change on the equity side of things. So we'll head over to our TV colleagues in just a moment. Where do you want to go?
Wonderwall is where I want to go.
Okay.
Oasis. You didn't hear about this, did you?
I did.
You didn't hear about... Carol did not hear about Oasis, guys.
Do I have to play? Do I have to...
Because before there was Taylor Swift or Beyonce, there was Oasis.
More scores.
It's the rock band that once claimed it was bigger than the Beatles. Although Carol Master doesn't know about Oasis, so...
I don't think so.
What?
Do you think that they were bigger than the Beatles?
No, that's what I'm saying. If Carol Master doesn't know about the Oasis. It never quite lived up to that claim, as our own Charlie Wells and Claire Ballantyne write. With years of bickering between the band's two brothers, culminating in a spectacular breakup just before a concert some 15 years ago.
Is there any rock band that doesn't just get pissed off and, ticked off at each other?
Noel and Liam Gallagher.
Yeah.
They've put their differences aside. They're going to try to recapture their mid-90s heyday. In 2025, I saw, now that I read this...
Have you seen these guys?
I can't... Can you guys help me out here?
Do any of you know this band?
Are you joking me?
Wait, so what's their popular song? God. What is it?
Wonderwall.
How does it go? Hum a few.
I don't have the rights to it. I'm not gonna hum it. I'll never live that down. Okay. There we go. I saw Oasis.
God.
I saw Oasis.
This earth. My world is complete.
I saw Oasis in the fall of 2002.
I don't even know who these dudes
are. In Spain, when I was studying abroad.
They're wearing Beatles type
And
glasses.
I think they got really angry at each other.
They kind of have Beatle haircuts.
They got angry at each other while they were playing, if I remember correctly.
So why are they coming back? Because of ka-ching, ka-ching?
I don't know. Their tickets are set to go on sale 9 a.m. in the UK starting Saturday, August 31st.
Why is this a big deal?
This is a huge deal.
Read story.
I can't. You know what, Carol? I've taken you far enough to the story. I can't convince you it's a big deal.
It is such.
This is one of the most read stories on the Bloomberg terminal.
People, please come back from your vacation homes because we need most read to be a little bit differently.
This is huge news.
I don't think so.
All right, I know what I'm telling the TV team in just a minute.
I'm going to be lost. All right, the closing bell starts now.
minutes away from Alex Dark Chocolate Steel, and here to help take you through the closing bell. It's a global simulcast. It starts right now. Scarlet Fu, of course, Titanium member over at Costco. Tim Stenovic, who I don't think is a member of anything, and Carol Master, of course.
They don't know what you're talking about.
I like it better when they don't know what I'm talking about, because then you get the crazy reactions out of Carol Master.
Speaking of not knowing what you're talking about, I have some breaking news here.
What's that?
Carol has no idea who Oasis is.
What?
What?
Neither did Quinette, our senior producer. I don't know. They were in the mid-90s, guys.
I'll be on
I
any
don't
team
know
with Queenette.
Where Carol was.
I even sang it in our meeting today.
Champagne Supernova. I sang some Wonderwall earlier on air, and I never sing anything because I was that such a
hummed
loss.
a few bars. I have no idea what that was.
Oh my God, Carol!
Can you believe this?
Come on!
Don't look back in anger. Come on.
They were supposed to be bigger than the Beatles,
They
but
are
they
not
weren't.
bigger than the Beatles.
Carol.
They're not. They're not bigger than the Beatles. I mean,
come
on now.
Well, anytime you have to declare that you're going to be bigger than the Beatles, you're not going to be bigger than the Beatles.
No, I mean, please. They're not bigger than the Beatles, but still.
What did the Beatles sing?
All the songs. I want to hold your hand. Okay. Anyway, this conversation. This conversation perfectly exemplifies what's happening in the market. Nothing.
Well done. Well done.
Absolutely nothing at the end of the day.
Would everybody just come back from their beach houses and vacation so that most red could be something different?
They will. They will tomorrow at 4:21 p.m.
And then they'll go away again.
And then they'll go away.
All right. Well, you are seeing a lot of action today in the options market. That's not necessarily feeding through to the cash market in equities, as a lot of people are sitting on their hands right now till we get those big earnings, of course, out of none other than NVIDIA tomorrow after the bell. As for today, you're looking at a market that's relatively unchanged. A Dow Jones Industrial Average up by about 10 points here. The S&P up by 9 points, or about 0.2%. The NASDAQ higher by the same amount on a percentage basis. And the Russell 2000, that's your primary laggard of the day, down about 15 points, or 0.7%.
All right, back to the S&P 500 I go. Kind of an even split, you guys. 242 names in the S&P 500 gaining ground. Scarlett, 259 to the downside, 2 unchanged.
Okay, the IMAP is really unexciting. You take a look and, yeah, I know. There's green, then there's red. There's more green, admittedly, because tech is the best performer, up 0.6%, followed by financials and REITs. And then in terms of decliners, you have energy, because oil prices declined, Alex. Utilities lower by 0.75%, and consumer discretionary also lower by about 0.5%. Ho-hum.
Ho-hum is right. All right, so let's go to some of the individual gainers, if we may. Insulet, POTD, POD is the ticker. Stock up about 6.6%. Medical device company announced that their Omnipod 5 received FDA clearance for people with type 2 diabetes aged 18 years and older. Our own BI industry team and analysts saying that this clearance unlocks an additional 6 million U.S. patients, which is nearly a 4-fold gain. So you can understand maybe why investors are sitting up and taking notice. Another one kind of in this space, I feel like, ResMed, up more than 7%. It was the #1 gainer in the S&P 500 today, highest intraday since August of 2022. William Blair saying the breathing machine maker now views the GLP-1 weight loss drug impact to be a tailwind on its sleep apnea and CPAP business versus management's original view last year of a neutral impact. So that's kind of, I know, it's kind of a Netflix was the top gainer in the NASDAQ 100. Evacor ISI, analyst Mark Mahaney coming out, raising the firm's price target to $750 from $710, keeping an outperform rating on the shares. They've done some channel checks, and they continue to see mid-single-digit percentage upside to the streets. Fiscal year 25 EPS, and with even further upside if Netflix returns to its historical price increase cadence. So that went up 1.2%. One last one for all you tea drinkers out there. Hain Celestial up almost 20% in today's session after the company's fiscal fourth quarter organic sales declined less than Wall Street had expected. Keep in mind the stock's still down more than 20% year to date. Still don't know who Oasis is.
Okay, so I can't help you there. I will.
You tried, Tim. You tried.
I tried. And she's an Apple Music person. I'm a Spotify person, so I can't send her even Spotify links. So yeah, we're having issues here.
We're doing some Googling tonight.
Supermicrocomputer is my decliner of 3, one of the 3, down 2.6% today. They fell after Hindenburg came out and said it's short SMCI. The stock fell as much as 8.7%. It did pair some of those losses just to close lower than 2%. Hindenburg did write that an investigation into the company revealed, quote, glaring accounting red flags, evidence of undisclosed related party transactions, sanctions and export control failures, and customer issues. A spokesperson for Supermicro said the company, quote, does not comment on rumors and speculation. And Kava Group, I was doing gainers while Carol was gone Friday and Monday. Kava was on my list of gainers those days. Now it's on my list of decliners, down 6%. It did fall as much as 9.5% after the company's largest individual shareholder and a group of executives filed to sell shares. Ended up closing down by just about 6%. And Hims and Hers Health, it's a telehealth platform, fell today by 7.5%. Remember, the company's been selling compounded semaglutide to treat obesity, but shares fell after Lilly came out and said self-pay patients could now buy these single-dose vials of its own weight loss drug, Zepbound.
All right, taking a look at the bond market, guys. Yes, okay, kind of a snoozer, but we had a two-year auction of $69 billion and actually went pretty well. There was some strong indirect bidding, and you see a little bit of a bid into the bond market, and the two-year yield's down by 3 basis points. And we do get supply, guys, over the next couple days. We get the 5-year tomorrow, $70 billion, and the 7-year on Thursday, $44 billion. So this could actually move some stuff.
All right, speaking of moving, you know, we talk about a lot of the financial types heading to Florida, the Miami area, and so on. Well, it seems like soccer continuing to build out its hub in a big way, expanding kind of their FIFA presence, and that includes the president, Tim.
Yeah, headed to Miami. They're gearing up for the 2026 World Cup. It's going to include matches in Miami, but also 15 other cities in the U.S., Mexico, and Canada. Their footprint expands and bolsters Miami's standing as a global soccer hub. Of course, we can't talk about this without talking about superstar Lionel Messi, who led Argentina to victory in the 2022 tournament.
And there he is in his best-selling pink jersey as well. You know, yeah, that may be the case, but Miami needs to do a better job with managing game day. Remember what happened when Colombia played, I forget which team, but it was kind of a disaster with all these people who tried to not break into the stadium, rush the stadium, and it delayed the game for the Latin America World Cup.
All right, Nordstrom's out with earnings. Just taking a look at adjusted earnings per share. A nice beat there at 96 cents. Also, their full-year adjusted outlook also to the high end. At the most, they see about $2.05, and the low end, $1.75. And also, their total revenue for the second quarter also pretty strong, $3.89 billion. The anniversary sale was what everyone was really watching here for Nordstrom sales.
Yeah, it's kind of interesting, too. We talk about a 3.4% jump in sales, but as always, a lot of that growth is coming from the Nordstrom Rack brand. So you did have a beat on net sales there. The Nordstrom brand itself, the flagship brand, the revenue there, while higher, coming in below what the street was looking for.
Yeah, interesting. You know, this is one that's really shown some outperformance this year, up about 15%, though, as they go through some of their changes, and you're seeing it build on that, up about 1.7%. But we'll see what it says in terms of tone about consumer going forward. I'm curious to see what they say in terms of commentary on the call.
Yeah, Alex, you mentioned the anniversary sale. They said that the one day that fell in the third quarter, the top growing categories were beauty, active, and home at that anniversary sale. Eric Nordstrom also said that they're confident in the outlook for the remainder of the year and look forward to sustaining the momentum we built as we execute our 2024 priorities. Active, women's apparel, beauty, and kids had the strongest growth versus last year.
Do these results quiet all the talk about maybe the family taking Nordstrom private again, or someone else coming in and buying Nordstrom? Because fact of the matter is, young people do not go to department stores. We all know what the Nordstrom anniversary sale is, but try as they might, even on TikTok, it's not necessarily gaining a lot of traction.
But I gotta say, for Nordstrom Rack, though, I mean, those places are packed. Have you guys been? I mean, and net sales there increased over 8%. Comp sales were up by about 4.1%. So I hear you that the anniversary sale is super important, etc. But their Nordstrom Rack is really crushing it also.
Yeah, absolutely. Here, you know, I was kind of we're going to keep an eye here on those numbers here as Nordstrom shares continue to move higher in after-hours trading. There was a story that I was keeping an eye on, and this involved Pizza Hut. A bit of a gimmick here, but they've actually created, and I don't know if we have a picture of this, a pizza box that actually converts into a coffee table. I mean, this is basically some Cosmo Kramer type stuff going on here. Basically, they're saying, look, they're basically saying, look, when you move into a new place, what do? You order pizza, but you got no furniture, right? Everything's still packed up, everything's in boxes. So why not have the pizza box double as a coffee table?
Can I keep it for a few days?
I think you can keep it forever, Tim, and you put it right in front of your TV set, and you can watch all the Oasis videos that you want.
can I get
Yeah.
eggplant on the top of it? That's all I want to know.
Yeah, but
No.
doesn't like the oil come and like
the
seep through the
topping.
That's what I was
box?
thinking,
A topping.
Alex. You know, the cardboard kind of gets ruined after the pizza's delivered, right?
Yeah, and it collapses. The oil's gross. You know what I'm talking about?
All true. All good points.
Then you can compost it.
It's like going back to college.
Maybe that's what it's for.
Just saying.
Which was kind of during Oasis, right?
But you know what? If you read the press release until the very end, it's only available in the most popular U.S. cities to move to: Dallas, Charlotte, and Orlando. So it's not available to us in New York,
Oh, okay.
unfortunately.
Well, there's no room for these coffee
Well,
tables
I mean,
in
who
New
eats
York
Pizza
anyway.
Hut in New York?
I can't wait for
Good
all the
point.
Instagram pictures of people in their homes with their Pizza Hut.
I'm sure that's what
By
they're
the way,
thinking.
before you say goodbye, Carol, I know you like long goodbyes. I just want to point out Oasis has sold more than 70 million albums. According to Wikipedia, it's probably the most influential British rock band since, guess who? The Beatles.
I don't know.
I even saw that.
There you have it.
She doesn't
I
buy
saw
it.
an Oasis concert in 2000.
This is why they broke up, Carol,
I'm
because of
probably
you.
going to own a Pizza Hut table before I own one of their albums. No, I
No,
don't.
you don't have to own an album. Just recognize one of their songs. That's what we're going to work on.
All right, I'm going to go home.
I'm coming over to your desk after
you know
this,
I'm
Carol.
going to go home and I'm going to listen to a song like, oh my God, I love that song.
Yes,
Right.
that will absolutely happen.
Chabellas. All right, that's a wrap. Our cross-platform radio, TV, YouTube,
I don't get Carol.
and...
Do you get Carol? Yeah.
All right, Alex, we'll see you later. We know Scarlett and Romaine are continuing on TV, and we're going to do something over here. Maybe listen to a little Oasis. On
There you
Bloomberg
go.
Radio. See you tomorrow, guys.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Nothing. Absolutely nothing.
You don't know this song?
I absolutely have nothing. And I grew up with tons of
Anthony,
music.
you know this
I'm
music.
No. Okay.
Yeah, he's, you know.
I know what you all are thinking.
What are we thinking?
We'll talk later. I got nothing.
We'll get you. There's 70 million albums, Carol.
All right.
You know, you were busy working during, during the 90s.
Choose your words carefully.
I was too.
I listened to a lot of music. I went to a lot of concerts.
All right. Hey, it is one of the most read stories on the
Moving
Bloomberg
on.
terminal. It's today's big take. It's about the disparities that are unfolding across the U.S., exposing deep divides in the commercial real estate market and the recovery of cities after the pandemic.
Yeah, from LA to Chicago and Boston, aging business districts are contending with empty offices and a slow return of workers. We talk about this a lot, while neighborhoods just miles or even blocks away are faring better or even thriving. Hence, it's not the same, right?
Yeah, the story is by our LA bureau chief, John Gittleson. He also covers real estate. It's edited by Bloomberg News senior editor, Kara Wetzel. Kara joins us now from our San Francisco bureau. So, Kara, the idea of a so-called flight to quality in commercial real estate, it's central to this story. What exactly does it mean, and why is that the key to understanding the turmoil that's rocking the U.S. commercial property market?
Well, I think there's been this sense that after the pandemic that, offices are bad. No one wants to go back to offices. The office market is cratering. We're going to be left with all these empty buildings everywhere, and it's a big crisis for investors. And it's certainly true to an extent. There has been, high-profile distress in the industry and a lot of defaults, et cetera. But we're kind of trying to show that it is not monolithic, that a lot of the distress is really in central business districts that have a lot of aging older buildings that people don't necessarily want to go back to. But even, just within a few blocks of some of these districts, there's much, more desirable neighborhoods and that are really thriving. And from a real estate investing perspective, we're actually doing quite well.
Kara, I almost feel like it's location, 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 right? And
Yes.
how things have shifted post-pandemic a little bit.
Exactly, location, location, location. Internally, we were calling this like the Swiss cheese story because it's like you have these holes in the cities where it's just really bad, but elsewhere, it's doing quite well. And so, I think the numbers are pretty stark. We have data showing that in central business districts, it's been a more than 50% drop in office values for many of these buildings. But what is from MSCI considered the suburbs, which is really anything outside a central business district, not like a traditional suburb. But it's only been a 17% drop from the peak, and in many areas, the values continue to remain higher.
So is this all because of hybrid work?
Yeah, a lot of it's hybrid work. It's like, employers now recognize that they have to have offices and locations that people want to go to. So, if you're in a downtown that's kind of, a little grittier or further away from transit, people are now, used to being in their homes in the suburbs and don't want to have to go as far. They're choosing neighborhoods and locations, based on sort of what feels good to get employees back to the office.
How much too is, companies that do say, I want you back to work or something, maybe are shifting their offices around too. And so that's part of it that just kind of exacerbates. So yeah, they're coming back, but we've moved our offices maybe, I don't know, to the suburbs or something. That's happening as well.
Yes, I think it's part of, their calculation of like, how do we get workers back? And they just want the best offices, right? And so prime offices, like kind of the top 2% of like all buildings in America, there's a shortage of those. And that's what all the employers want. They want the top amenities, the newest buildings. And so when you talk about commercial real estate distress, it's going to be the aging buildings and central districts that it's harder to build in. And employers are just going to choose these sort of outlier offices instead.
Hey, Kara, I love this story because it takes you around the U.S. to some of the cities that are hubs for not just national business, but international business. So it starts out in L.A., it takes us to Chicago, it takes us to Boston. It takes us to Seattle and Amazon's effect on Seattle. It takes us to Dallas as well. What's the picture that it paints in these different cities around the country?
Well, what was really interesting is each city kind of has its own thing going on, has its own, story. In Boston, it's kind of like the rise of the biotech industry in Boston, which makes a lot of the companies and the ancillary businesses be in the Seaport District, which has really just arisen like the past 15 years. And, sort of its presence in the financial industry where, Boston is sort of less so. So that district is fading a bit. Similar things in Dallas, the core financial area is also fading in the uptown area where Goldman Sachs is building a campus is a bigger place. So there's different, sort of different reasons for this happening in different parts, in different cities around the country. But, sort of the similar theme of just kind of the desire for higher quality space in a desirable neighborhood where, the kind of the key industries for your city is sort of the universal uniting factor here.
All right, so what does this all mean in terms of commercial real estate, office space, the future of kind of where there are some pockets that are doing well, some that are not? Like, how does this play out? Are certain municipalities, towns, cities rethinking that office space that just isn't working, those downtown business districts that aren't working? Are they rethinking about kind of what they need to do there and how they use that space?
Exactly. I think if you're a commercial real estate investor, you're looking for, prime office buildings and these neighborhoods that are really either up and coming or have just attracted a lot of new tenants. And then, downtowns are having to kind of factor, what is going to happen to these buildings. And there are movements to sort of either, convert them into apartments, which, many cities have a dire housing shortage, could be one option, or, find creative spaces. In Los Angeles, our example is a few universities have bought some office buildings to, use them for their own things. So it's kind of, I think the concept of this one central space and downtowns where it's just everyone like commutes in and goes to the office, that's being reshaped a bit.
All right, it continues, that's for sure, the pandemic impact. Kara Wetzel, thank you so much, senior editor at Bloomberg News. Check out this story. It is the Bloomberg Big Take. You can find it on the Bloomberg Terminal and at Bloomberg.com.
Hey, got some breaking news on the Bloomberg Terminal, what we call a red headline. Crossing here, Trump special counsel files new indictment over 2020 election. A federal grand jury on Tuesday, the U.S. special counsel appointed to investigate claims of interference in the 2020 election filed an updated charge against Donald Trump on Tuesday.
Yes, indeed. And the new filing signals special counsel Jack Smith's intention to move forward with the prosecution against the former president after the U.S. Supreme Court held he was at least partially immune from charges related to his official acts as president. The indictment removes certain allegations related to Trump's communications with government officials, but features the same 4 charges accusing him of conspiring to overturn the results of the 2020 election.
Oh, look at that.
Yeah.
So we'll see what
Curious
happens.
about the timing, and was this expected? Or?
Yeah, we'll see what ends up happening in terms of the timing here. Our Bloomberg government team out with a story about this as well. For more details, check out the Bloomberg terminal and over at Bloomberg.com as well.
Ready for a cup of coffee?
I am always ready for a cup of coffee.
You like your coffee. You like your really good coffee.
Yeah,
Can
I
say
do.
that?
Yeah, I think it's fair to say.
We've got the founder and CEO of Ziggy's Coffee coming your way in just a moment. Co-founder.
It's 4:22 on Wall Street. I'm Amy Morris. Nordstrom shares moving higher and after hours trading now about 10% higher in the post market as earnings top estimates, but the retailer is issuing some cautious guidance. Nordstrom beat Wall Street's earnings estimates, but it's also leaning on its off-price banner Nordstrom Rack for growth. So it's been issuing some tepid guidance for the full year as it contends with softening demand for luxury goods. Big market-moving event of this week, though. Tomorrow afternoon, NVIDIA reporting earnings. The AI chip giant is the second most valuable company on the S&P 500. Its heady valuation could mean big swings for the market. We bring you closing numbers each day here at Bloomberg. S&P gained 9 points, NASDAQ up 29 points, Dow up 10 points. The 10-year Treasury yield at 3.83% and the 2-year at 3.91%. That is your Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenovec.
Thank you so much, Amy. Do appreciate that. So 20 years ago, Carol,
Yes.
you were not listening to Oasis.
I was not.
Yeah.
That's not going to end for me, is it?
Yeah, never. That's what happens here.
I'm waiting for like the
You got to
hate-
keep your
hate
secrets
tweets
close.
or X's or
Yeah, we're gonna be
gonna
hearing
happen. It's
it.
gonna
Well, 20 years ago, the first Ziggy's Coffee opened up in Longmont, Colorado, just northeast of Boulder. The idea behind it, from the husband and wife team, was, in the words of the company now, to create, quote, a space where people could gather and feel right at home. So fast forward to today. 96 stores.
Yeah.
Vast majority of them are franchised. They're set to pass 100 by the end of the year, and they're set to be in 22 states by the end of the year. Carol, they've sold more than 11 million drinks, and they've done it all by bootstrapping.
Yeah, that's pretty impressive. All right, Brandon Knutson is with us. He is the co-founder and chief executive officer of Ziggy's Coffee, and he joins us from Meade, Colorado. Brandon, really cool to have you here with us. How are you?
I'm doing great. Appreciate you guys having me on.
You bet. Before we kind of talk about today and look forward, take us back 20 years ago. What led you to opening up that first coffee shop?
Yeah, it really goes back to college. My wife and I were kind of lost in school, and she got a job at a little drive-through coffee shop, and I had the great idea that, hey, let's just drop out of school and, we could do this. How hard could it be? And I did convince her. Her parents didn't love that, but I did convince her to drop what we're doing, drop out of school, and pursue our dream of opening a drive-through coffee shop.
But it is hard, and like you kind of run into like whatever the psychological phenomenon is when you're only talking to people who've done it successfully. That it sounds like it's easier than it is, but there are a lot of people like you who aren't still doing this because what they did not succeed. What made it work for Ziggy's?
I think it was a situation that we put ourselves in. We when we opened our first, it was actually called Gizzy's at first. I quit my job, and we were living out of the tip jar, living out of the whatever little money we could make, and we were just in a position where no matter how hard it get, we didn't have a choice, and so we fought through it and listened to customers and just grinded away.
But it's interesting, right? Like I think certainly in New York, there's a million places you can go get coffee. Well-known big chains,
No Ziggy's.
No Ziggy's.
Not yet.
Not yet. Smaller places. I tend to like kind of local places, small coffee shops. But there's so
You're
many
more of a
choices.
third wave coffee person.
I am more of a third wave. Or make it at home because there's so many great devices. How in 2 decades has the market changed?
Well, I mean, drive-throughs huge now, and I give a lot of credit to Dutch Bros. They really put drive-through coffee on the map. I know Starbucks has done a great job with that as well. I think it's become, if you look at the product mix, I think when we first started, we were probably 80% hot coffee and 20% cold, and it's switched. It's like 70 cold between energy drinks, smoothies.
That's what Starbucks is too.
Yeah.
Yeah, it's just what people are looking for. It's very interesting.
It's funny that the drive-through is so big for you, because when you started this company, it wasn't about drive-through. It was about creating a space similar to what Howard Schultz has talked about when he expanded Starbucks into the so-called third place. Have you been able to kind of keep to the core of creating this space for people to gather and hang out even with drive-through?
Yeah, I think it's kind of one of those unanswered prayers. We wanted a drive-through. We did not want to do a cafe. We just couldn't afford it. We were broke college dropouts moving to a new state where just knew my sister. And so the only thing we could really afford to do was we got really lucky and got this brick and mortar place in downtown Longmont. And what we learned there was, we're really in the service business. And no matter, I joke, I made horrible coffee back then, but I had a great relationship with customers. So we learned that first and then translated that into the drive-throughs.
Were there moments, I feel like whenever we talk to an entrepreneur, even super successful ones like yourself, or those who are now co-founders and heads of, publicly held companies or used to be, there's always a moment where you're like, I'm not sure we're going to make it. I am curious how many times you felt that way.
For 12 years, probably 10 years.
Wow.
And the thing with us is every time we made it, if you got our first store really running and making some money, then I begged my wife to do a second one. And then we went back to, oh my gosh, what did we do and are we going to make it? And then when we got there, we opened a third, and it's been an ongoing battle for sure.
So talk a little bit about growth, because Carol and I do talk to a lot of folks who are in the franchise business. And, you know, the idea that it's really asset light is, I think, appealing to a lot of folks because they are able to grow without actually taking on that risk. They can offload that risk. We spoke to the CEO of Wyndham Hotels last week about this.
Yeah, I think it's an interesting business model. I mean, how does that make it so much easier for you guys to grow without the risk? But you've also got to make sure the brand doesn't get tarnished.
Yeah, exactly. I mean, it comes down to training. We have a team of over 50 people here for 97 locations because it's all about support. And I think of every store as our store from the standpoint of not wanting to fail and from a risk standpoint. We're very close with all of our franchisees. So again, yes, it's capital. It's a lot easier on the balance sheet, but we still feel the burden and we take every store seriously as if it were our own.
Brandon, how do you decide where you grow and how you grow, the rate at which you grow? Like, we want to ask you a little bit about Starbucks too and kind of where they are. It feels like they're always the one everybody is measured against. But having said that, it felt like it got to a point where there's one on every corner, and how could it not be eating into the business of one or the other? So how do you guys proceed with growth in a smart and thoughtful way that really pays off in the bottom and top lines?
Well, there's two areas that we have success, and the first one is people. We need to find great franchisees, great operators. Because at the end of the day, we're in the service business, and employees look up to their owners, and they need to respect them, like them, and that's when they'll do a really, really good job, is when they really care about the owners. And so the people we're not like targeting, a certain wave across the country. We don't care if we're in Maine or if we're in Southern California. If we have a great operator, we feel really good. The next piece is like, we love small markets, 15,000, 20,000 person towns, 50,000, start getting over. We love those small markets.
Like Mead, where you're joining us from.
Yeah, we have 3,500 people, and this is one of the best stores in the company. We're plugged in the community. We have community events. We sponsor high school things. My kids go to high school and middle school and elementary school here, and so people just buy in. We are the coffee shop.
How much capital does somebody need to start a Ziggy's?
It's a wide range. We say, on the lower end, maybe 100, 150,000 on cash, all the way up to, if you're going to buy land and build and develop, 350, 400,000, if you're going to buy the land with down payment and those sort of things.
How quickly does that initial investment get paid off? How quickly is the return?
It depends on what year we're talking about now. Interest rates, it's such a wide variety for folks. It'd be hard to even tell you what that is.
It's okay. So it's obviously been harder in a higher rate environment, correct?
Oh, it's tougher. I mean, between interest rates and labor and cost of goods and those sort of things, it's always moving, and we're just trying to adjust as it goes.
What about franchise fees that get paid to you? I mean, that's how you guys end up making the money. How do those sort of tabulate?
Yeah, so franchise fees are really the upfront fees to buy the rights to the license, and that money gets used to open stores and train. We're big believers in heavy training. We send a team of 6 people out for at least 2 weeks to open stores wherever they are, because it's really important to open really strong.
But then
from the other side,
yeah, go ahead.
I was going to say the where the money is made on our end, where the revenue comes in to support our team that supports our franchisees, is a royalty of 6% on the kind of adjusted gross.
Yeah, and okay, so let's go to, we mentioned Starbucks before, and it's certainly a story that has been front and center for us as it's getting a new CEO, very well known in the fast casual space.
Very well known to you too.
Yeah, Brian Nickel.
You've known him for years.
We've, known him for a while, yeah.
We've interviewed him a lot.
You and I have also both talked to him, and followed him because he came in, just as the pandemic was getting underway, a tough time with a well-known chain that was, certainly had its issues, and really got deep into digital in terms of automating some things at the chain. But now it's Starbucks and getting ready, I think, taking over. I don't know if he's officially, but I know it is.
No, September 9th, I believe.
September 9th, okay. But Starbucks fighting off slump demand, customers are having to make choices. And I wonder what you think about price point. They're also dealing with some concerns in the Chinese market. They're looking to, cut wait times. They've got activist investors. There's a lot going on. What do you make of Starbucks' woes? How do you think about where they are? And I understand you operate in a very different space, but I'm just curious what you watch in terms of their woes.
Yeah, I mean, I think it's crazy to, put ourselves up next to Starbucks, and they are the reason that we're all in this business. They educated the consumer, and we all should be saying thank you. And so I will never, ever speak poorly on them. I think a little bit, it's just a little bit of tiredness of the brand. I mean, I think people are excited about new brands. Like I said, Dutch Bros and Ziggy's, it's new. I think the comparisons with us and them, we have a big food menu. Our food mix is 25%, and which makes us different than a lot of other brands. I just think that it's hard to stay on top. I think everyone's trying to knock you down, and I think they'll figure it out. They always seem to. We try to stay out of all the things that are polarizing. We just focus on giving great, authentic service to our customers, and I could see them going back to that. But honestly, we're head down, focusing on our franchisees, just trying to help them be successful. And it's a tough market out there, and we want to really spend our time just focusing on our customers.
What do you find when it comes to loyalty, Brandon? Like, when people find out about the shop, do they come back? How do you have loyalty programs that track that?
Yeah, we have a loyalty. We're in the mid to high 50% as far as our in our app usage. So those are our loyal members. Right now people are not frequenting stores as much. That's definitely our goal. But it's all about regulars for us.
What about like app ordering and stuff?
Yeah, we do some app ordering. It's not a ton. It's single digits order ahead. We're working on that. We just released our new app about a year ago, and working through some kinks there. But it's definitely a big part of it.
So what's next for you guys? And I am curious, you say, it's fun to kind of put yourself in the league of Starbucks. Having said that, is there a growth that you want to stay at, or a size that you want to stay at? Do you think about going public? Like, what's the future?
I couldn't think of anything worse than going public for me personally. It just looks like, it doesn't look like a whole lot of fun to me. We're going to open, we loved it. We're targeting 45, 50 stores a year. We're going to let the franchisee dictate that. If we can find awesome people to open 100 stores a year, we'll do that. But you can't force it. And that's what's great about not being public. We can grow at a pace that makes sense for us, and it makes sense for franchisees, and make sure we're putting them in positions to be successful.
Well, it doesn't necessarily, you don't necessarily have the pressure on you to go public or have an exit because you haven't accepted any outside financing, right?
Correct. No, our goal is to just help every franchisee make as much money as possible right now, and there's no pressures outside of that.
So profitable, I assume you are, given that you haven't had to take on any venture fundraising or private equity funds.
Yeah, yes. We've really invested in our team, and so that's been the biggest challenge for us as a company. Is we have 50 people for our headcount's over 50 for 97 stores. It's a big number, but we really believe, especially right now with how tough it is out there, that we need to provide a ton of support and a ton of training and information, and we need to be relevant with LTOs and those sort of things. Which is why we have just an amazing creative team and operations team here, which does cut into that, but we're looking down the line.
How do you figure out operations and logistics at your scale, given that there needs to be a consistent customer experience at stores that are several states away from where you are in Mead, Colorado?
Yeah, technology is great. I think 20 years ago, this would have been really, really hard. But we have tons of metrics, from, Zoom timers that measure how long the car is in line to, obviously online reviews. But we use, mystery shops, and we do that on a regular basis. Like once a week for 3 months when a new store opens, we have a mystery shopper every week that goes in and just takes pictures of their cup and makes sure that the drink is right and the food is hot and all of those things. That really helps us keep tabs on how people are doing.
Yeah, I mean, this is an undercover customer, basically, that, provides the report to the franchise owner. So, and what about actually, like, making sure the coffee is consistent? Do you roast the coffee all in one place and then ship it out to the different stores?
Yeah, absolutely. So we have an incredible partner, Delano's Coffee Roasters out of Seattle. They roast the coffee there. They put it on a semi and send it to Loveland, Colorado, to our distribution company, and then we send it from there up to our franchisees.
I love getting into the nitty-gritty. Having said that, a place like you and kind of the towns, it sounds like, or the markets that you are serving can give us a really great idea about what's up with the consumer. And we have numerous stories that we've been reporting out here at Bloomberg about consumers making choices and trading down, or, not buying one thing so that they can do something else. So what are you seeing with the consumer? What noticeable trends that tell you whether or not the consumer is starting to feel some stress?
Yeah, it's frequency, right? Someone that used to come 4 days a week, they come twice now. And, where 2 years ago, $5 was nothing. Now it does matter. And we talk to our baristas, franchisees all the time about just, don't take that for granted. When you do get them those 1 or 2 times a week, make sure it's a great experience, because they're there for the coffee, but they're there more for the relationships and talking to someone on the way to work or after school. And so it's really important that we take care of them in that way.
And getting workers, labor costs, supply chains, all of that stuff, something that we obsessed about, right after the pandemic. Has all of that calmed down?
Yeah, labor's gotten much, much better. I mean, it's very expensive now, but as far as application, you might get 4 applications for barista, a year ago, and now it's 50. And so there's definitely, a larger labor pool. Wow, and then certainly supply chain, we're not fighting over getting products anymore. It's still expensive, but it's much more available.
That seems a little concerning, no? Up from 4 applications for a barista up to 50. Is that consistent across markets?
I have to check with my franchisees on that. I don't know. I would assume so, but again, I don't have that data in front of me.
Yeah, because that would show that there are a lot of people out there looking for work.
All right, I feel like the million, billion, trillion dollar question is, how the heck did you guys do this on your own? We talked about bootstrapping it, and Tim and I know in preparing for it, and you talked about it, that you did you tap family, friends at all? But like, how did you do that? Or was it just a case of, I don't know, how did you do it?
No, I appreciate asking the question. My mother-in-law gave us the first initial loan of $50,000 that we paid off right about when we paid our student loans off, which took about 14 years. So that really helped. And then my dad kicked in some money to help a little bit, about 70 grand. Other than that, it's been floating, begging in our early days, begging the sales tax department not to close our doors and let us have some time to pay it off. And it's just grinding. And I have an amazing wife who is just knows how to figure things out. And then just some key hires along the way. We just got really lucky and hired some amazing baristas that are, one of those now our vice president. And so we've just had a ton of support and help, and it's been hard, but man, it's been wonderful.
Hey, because this isn't available in many places, at least not yet, where our listeners and our viewers are, give us an idea of price point and sort of how it compares to other coffee places that people would go to. How much is a cup of coffee?
That's a great question. It depends on what you want, like a drip coffee. I even have my notes here because I know you might ask those questions. I mean, we're priced right at probably Starbucks, if not on some items even a little bit more. And you might kind of scratch your head a little bit, but our taste is a big part of what makes Ziggy's great is when you go from a 12 ounce to a 20 ounce, the flavor profile is very much the same. But in order to do that, you really got to up your shots of espresso. You got to up your flavor. I think a lot of competitors kind of just add a little bit more milk to it. And so in order for us to do that, like in a 20 ounce, getting 3 shots or 4 shots versus maybe 2 at a competitor, we have to account for that. But considering those things, I would say we're a little bit less expensive. But if you were to look at 16 ounce, latte versus, say, a Starbucks, I'd say we're right there, maybe even a tad bit more.
All right, I've been popping in some zip codes. One last question. Definitely not New York City, not right outside New York City. What's the closest to Ziggy's to New York City?
Oh my gosh.
New Hampshire, maybe?
New Hampshire. Yeah, we got North Carolina, New Hampshire. Yeah. That's probably as close as you're going to get there. You can make maybe a day trip over there.
Yeah, we could do a day trip.
Yeah, your coffee's going to be cold by the time you bring it back to New York, Carol.
70% cold.
That's true. Maybe the ice will be melted. Hey, real quick before we let you go, food.
You're not going to ask. Wait, are you coming to New York anytime soon?
Nothing in New York. We're working on New Jersey. Just from a drive-through standpoint, just challenging real estate market. But at the end of the day, we just haven't found the right franchisee yet.
All right.
Challenging real estate market is a know to describe New York City. I think that's an understatement.
Tim is always hungry, so ask your food questions.
Yeah, how much of revenue is from food? Because I know that you're increasingly making a food menu part of this.
25%, believe it or not. So when we first opened, we were 3 to 5. And we've grown it. So we've done a great job with, we just breakfast burritos and we do a lot of gluten-free stuff. It's really, really, my son is celiac. And so we just started carrying that stuff and have really grown and people love it. So tons and tons of food options.
Well, listen, this was really fun. Good luck and look forward to checking in with you maybe down the road again. Be well. Enjoy the rest of your summer and have a good fall.
Appreciate you having me.
You bet. Brandon Knutson, he is co-founder, chief executive officer of Ziggy's Coffee, joining us from Mead, Colorado.
Enjoy your summer. I mean, he's working 24/7, Carol. There's no break for this guy. You can tell.
What did he say? Out of the 20 years that they've done, 12 were like,
it's
it was struggling and stressful. Listen, we want to get to a story that crossed the Bloomberg about 30 minutes ago.
Yeah, the U.S. Special Counsel appointed to investigate claims of interference in the 2020 election filed updated charges against Donald Trump on Tuesday. With more, we've got Bloomberg News U.S. legal reporter Eric Larson. He's here in our Bloomberg Interactive Brokers studio. Talk about a surprise filing.
Yeah, it really did come as a surprise. I know that we were expecting there to be additional court hearings in the case in Washington to see, what was going to happen next, whether or not the judge there would sort of decide on her own what charges in the case could go forward, given that Supreme Court landmark ruling that presidents have some immunity from criminal charges. So it was just a wait and see what was going to happen with the case. And now we know there's a so-called superseding indictment, a brand new indictment by Jack Smith. They've put in here that this is their view of how the case needed to change given that landmark Supreme Court ruling in Trump's favor largely. So now we'll sort of restart the case a little bit as it moves forward here.
Yeah, from what I understand, the new indictment cutting certain allegations related to Trump's communications with government officials, including the section related to his alleged efforts to involve the Justice Department. But still, those same 4 charges accusing him of conspiring to overturn the results of the 2020 election still there. So is it the whole idea is to make it a stronger case for Jack Smith?
I think the idea is to make it a case that when it returns to the Supreme Court, will survive the new scrutiny that they've put up there. So it's all going to boil down to whether or not everything in the indictment can be viewed as an official act or on the outer boundaries of an official act, or whether it's private conduct. So Jack Smith's team is, clearly that they've gone through. They had another grand jury, look at this, and this is the case that they think will survive the Supreme Court ruling if it goes back to the Supreme Court.
So what?
Go ahead.
Well, so what happens next?
So what happens next? I don't know exactly for sure, but if I had to,
because there's this little thing called an election going.
Yeah. Well, there's no chance of a trial happening before the election at this point. Even before this superseding indictment was filed, that seemed like it was not going to happen. So what will happen is the case will potentially have a new arguments where Trump's lawyers will argue to dismiss this superseding indictment. You can be sure there'll be disagreement over whether or not this has been narrowed enough to fit the Supreme Court ruling. Trump's lawyers may seek to narrow it further, or to have the whole thing tossed out again is another possibility. So it really remains to be seen if this ever does go to trial. Of course, plenty of people say if Trump wins, he'll just have this case thrown out. If he loses, of course, then this case will proceed.
Just a reminder, this is completely separate from the Manhattan jury on May 30th finding Trump guilty on 34 counts of falsifying business records.
Right. That's a separate case. He was convicted in that case. That did go to trial, obviously.
And he'll be sentenced, or the judge, he's supposed to be sentenced on September 18th.
That is correct. And we are waiting for a decision from that judge, Juan Marchand, here in Manhattan, on whether or not to delay that sentencing until after the election. Trump made sort of a last-ditch motion saying that it would be election interference for him to be sentenced with the election so near, and some other arguments as well.
If back to the filing from today, if Trump does win the election in November, can he make all of this go away?
That is our understanding, is that the Justice Department is part of the executive branch, of course, and the president has a lot of authority to pressure or direct the Justice Department on cases. That's widely expected that is what Trump would do. It's less clear exactly what steps he would have to go through to get there. For example, if an attorney general could theoretically challenge him on that. But again, this is a lot of hypotheticals, but certainly the legal experts that we've been speaking to for months now theorize that if Trump is elected, he would have this case tossed out.
You're talking about the Jack Smith?
Yes.
I mean, so remind us of kind of where we are on the case, the whiteboard of cases against former President Donald Trump.
Sure. So the one that we know he's already lost, he faces up to 4 years in prison. on 34 counts of falsifying business records to hide that hush money payment to Stormy Daniels before the 2016 election. So seems like so long
When he
ago
wasn't
now.
president.
When he wasn't president, but he argues actually that this immunity ruling from the Supreme Court affects that trial as well. Even though it had nothing to do theoretically with being president, he said that the trial that we had here in New York that we covered was tainted by testimony and other evidence that wouldn't have been allowed under this Supreme Court standard. Because even though the hush money was paid to Stormy Daniels before the 2016 election, some of the witnesses were his White House officials. The payments that he made, for example, were made, while he was president, repaying Michael Cohen, his lawyer.
How does that work, though? That's
Well,
pretty tricky.
How does what work?
Well, what he's saying is that some of the payments were when he was once in the White House, but initially the hush money happened before he was even president.
It was made by Michael Cohen, $130,000, and then Cohen was
and definitely
reimbursed.
before the Supreme Court ruling on immunity.
Right. I mean, it potentially is a long shot. The Manhattan District Attorney says there's no way this has any effect, and the verdict should not be thrown out. So we'll wait to see what happens with that. Of course, the other Jack Smith case, the federal case that was brought over Trump's taking of classified documents from the White House and his alleged obstruction of efforts to get them back. That was dismissed by Judge Eileen Cannon in Florida, and the special counsel is going to be appealing to try to get that case revived.
Wasn't there, and there's also the Georgia case.
There's the Georgia case. Yes, a lot of drama from that one. It's sort of been on hold because of the dispute over Fonnie Willis, the Fulton County District Attorney there, and the relationship that she had with the lead, her lead prosecutor. And so there's been an effort to have her thrown out of the case, and I think we're just waiting for something to happen on that. So they have to straighten out the whole issue with that prosecutor before anything can happen again in that case.
Yeah, remember? I know.
Fortunately, we have Eric Larson
I know.
here to
I forgot about that.
the whiteboard
of
all the
I'm
cases.
like, where are we in that one? Unbelievable. Thank you so much.
You're welcome.
Thank you so much. That really puts it all in perspective and gets us up to date. I know.
Yeah.
It's like.
Thank you. That's Bloomberg News U.S. legal reporter Eric Larson, who wasn't scheduled to be on with us today, but
so much for a
he's always
Tuesday
welcome.
in August.
Thank you.
He's always
welcome.
Happy to be here.
All right, you are listening and watching Bloomberg Business Week. Carol Master along with Tim Stanovic, and folks, this is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg in Washington, I'm Amy Morris. Investors counting down to NVIDIA's earnings after tomorrow's close of trading. The AI chip giant, the second most valuable company on the S&P 500, and its heady valuation could mean big swings for the market. Shares of NVIDIA gained 1.5% in the regular session. Nordstrom shares still moving higher in after-hours trading. Shares now 9% higher in the post-market as earnings top estimates, but the issuer still issuing some cautious guidance. Ryanair expects lower fares and flash sales to be this winter to attract would-be flyers struggling with higher interest rates. CEO Michael O'Leary tells Bloomberg TV that air traffic control, ATC, part of the problem.
From an operational point of view, ATC has been a nightmare. ATC fees have gone up 15% in the last 3 years. European flights are at 5% less than they were in 2019. But the number of ATC delays and cancellations are 3 times in summer 24 what they were in summer 23. So we're paying more for a poorer service.
O'Leary also reiterated his frustration with Boeing, which has struggled to ramp up production as it works to bolster quality control. Shares of Ryanair 4.6% higher. The long-running saga over Paramount Global and its new ownership may be coming to an end. David Ellison's Skydance Media is poised to take over the struggling media company after Seagram's heir Edgar Bronfman Jr. dropped his last-minute bid. Geetha Raghunathan covers media for Bloomberg Intelligence.
It was really a little bit of a head-scratcher because they made that 11th hour move. He cobbled together something like 20 outside investors, and then when kind of push came to shove, he really couldn't find the equity financing required to back his $6 billion offer.
Geetha Raghunathan with Bloomberg Intelligence. Paramount shares fell more than 7% in the regular session. Those are the company stories we've been following this hour. I'm Amy Morris, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. Special counsel Jack Smith has filed a new indictment against Donald Trump on election interference that keeps the same criminal charges but narrows the allegations against him. This after the Supreme Court opinion conferring broad immunity on former presidents. Bloomberg's legal reporter Eric Larson.
Jack Smith's team is, clearly that they've gone through. They had another grand jury, look at this, and this is the case that they think will survive the Supreme Court ruling if it goes back to the Supreme Court.
Again, that's Bloomberg's Eric Larson speaking. With Bloomberg Business Week, the new indictment removes charges that dealt with Trump's interactions with the Justice Department, but features the same 4 charges accusing him of conspiring to overturn the results of the election. Donald Trump says he has reached an agreement with the Kamala Harris campaign on the September 10th debate hosted by ABC News. In a post on Truth Social, he says the rules will be the same as the last debate on CNN. He also says a possible third debate on NBC has not yet been agreed to by the Harris campaign. The Israeli military says it rescued one of the more than 100 hostages still being held captive in Gaza. There aren't many details about the rescue operation, but IDF spokesman Daniel Hagari says the hostage was rescued from a tunnel in Gaza.
During a complex rescue mission, Qaid Farhan al-Qadi from the Bedouin community of Rat, who was kidnapped from Israel by Hamas terrorists during their massacre on October 7th, has been rescued.
Hagari says al-Qadi is in good medical condition and has been reunited with his family. National Security Advisor Jake Sullivan is in Beijing for a 3-day meeting with his Chinese counterpart, Wang Yi. It's the first visit to China by a national security advisor to a U.S. president in 8 years. Sullivan and other senior officials will be discussing a wide range of contentious issues, including Beijing's support for Russia's war in Ukraine and Washington's tech curbs on China. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Carol and Tim.
All right, Nancy Lyons, thank you so much. As we get ready to wrap up on this Tuesday, I do want to mention a headline that crossed the National Football League, which has been the last major sporting holdout to institutional capital, relying on billionaires essentially to invest in teams rather than Wall Street. Well, NFL owners, Tim, now have agreed to sell stakes in their franchises to private equity.
They agreed to make a move that would make their franchises more valuable?
I love when you get like this.
Okay. The non-cynic in me will read the story. Private equity firms can buy stakes of as much as 10%. The pre-approved firms are Arctos Partners, Ares Management, Sixth Street Partners, and a consortium comprised of Dynasty Equity, Blackstone, Carlyle, and CVC Capital Partners.
Yeah, investors can buy stakes in as many as 6 teams at once. And so our own team putting together kind of where we might see some new bidders potentially buying into. And they mentioned Jeffrey Lurie exploring a sale of a minority stake in the Philadelphia Eagles, according to a person familiar with knowledge of the matter.
Okay, Ken Griffin has entered into talks with Stephen Ross to buy a minority stake in the Dolphins, along with the Hard Rock Stadium and the Miami Grand Prix. It didn't work out and the talks fell apart, but Ross is still up for selling a stake.
Yeah, and owners of the Buffalo Bills, Terry and Kim Pagula, they have hired Allen and Company to help sell a minority stake in the Bills. They bought them back in 2014 for a then record $1.4 billion. Forbes now says they're worth about $3.7 billion.
Jessica Pagula, the pro tennis player, 6th ranked.
Oh,
woman,
yeah.
is playing tonight at 9 o'clock on Arthur Ashe Stadium. So maybe we'll see her later this week.
Yeah, we'll look for her,
Yeah,
like warming up.
the daughter of Terry and Kim Pagula.
Yeah. We actually...
We're talking about tennis because we're going to be at the U.S. Open later this week. That was that a perfect segue?
No one does it better. What can I tell you? And, if we could all just go home, grab a beer, and listen to some Oasis, life would be complete.
Fortunately, Elizabeth appreciates this.
Which part?
She's the only one in the control room who appreciates my segue. It was a sports one and a billionaire one.
I know.
Paul loves it too. Thank you, Paul. All right.
Listen, he obviously needs some love, so please send love to Tim. All right, that's going to do it for us. We'll see you tomorrow. Balance of Power starts now.